you know, before I make any video, as in go raw into just analyzing the market, the way I really want to, independently and without any of the things that I've written down or that I've looked at from the BeaconFX.trade website. I want to quickly share with you guys what the market is actually, where the market, the forex and the crypto market is actually moving right now. And we also might be able to dive or delve into some other categories too, or some other aspects or sections, or that is unrelated to these two. Now let me ask you something. If this is what I've actually thought, that I don't know if a lot of people are also thinking like that if the market is slowing down globally, okay, and I'm going to be talking based on everything I have, my this intelligence that has been gathered here, they call it intelligence gathering. Okay, if the market is slowing down globally, have you ever asked yourself, why are some assets still rising? And more importantly, where is the big money actually flowing right now? Okay, because I don't want to use smart money, because smart money traders will think, yeah, it should be this BeaconFX.trade mentioned smart money, which means smart money is good. Of course, every approach is good. All right, so where is the big money actually flowing right now? Now, because what I am seeing from the latest global data is this. Number one, that growth is weakening, and we're going to look at it. And also that inflation pressure is still alive, and also that geopolitical tension is rising again. Now, when you look at these three, if you are an advanced trader, you would sit down and do a thorough analysis to really know which financial asset or currencies you can pair together to want to take. But here's the twist: the market is not reacting in one direction. All right, so in this video, I'm going to try as much as possible to break it down for you in a very simple way. All right, no noise, no confusion, just clear direction. All right, now, number one, we look at the global economy that I talked about that is losing momentum. Now let's start from this one, because it's a big picture on its own. Now, across Europe, the data is very clear that business activity is slowing down. All right, and that services sector is also actually weakening. Okay, now, which also makes some countries like France and Italy, which also make them to already contracting. Even the overall Eurozone is barely holding above growth level. Okay, now, based on what we have in the fundamental news, okay, the economic news, when PMI drops, or when PMI drop close to 50, all right, when PMI drop close to 50, it means that the economy is no longer expanding strongly. So it is either slowing or about to reverse. And right now we are seeing Germany slowing, we are seeing France already weak, we are seeing Italy slipping into contraction, and also this is not strength. All right, this is fragility. Fragility. All right, so that is just number one thing you also need to know. All right, now another part is to look at the UK economy, which is for now stuck and also struggling. Now let's talk about it also in the most professional way. The data we saw, the data from the intelligence gathering also, is that growth is almost at a standstill. All right, yeah, for the UK economy, and the services PMI barely above 50, and that business confidence is also now it's also dropping. The business confidence is dropping now. At the same time, the British pound is weak, sitting near 6 months low. Okay, yeah, the British pound is weak. If you look at it, yeah, sitting is very, 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 very weak. I'm not saying overall weak, the British pound is weak. Okay, now the question is why? Because uncertainty, if you look at it, is rising again, especially from global tensions. So even if inflation is still there, the economy itself is not strong. All right, and that is a dangerous combination. That is a dangerous combination. Okay, now I think that's enough. If you want to know more, I think this is the time you can click on the subscribe button and find a way to hit that website link or URL so you can become a member of the BeaconFX.trade, and also that you can benefit from the market intelligence. It's raw, very raw. All right, so that's a dangerous combination. Now another thing we also need to look at from the information gathered here is the geopolitics, which also I'm going to talk about. Now this is where things get serious. All right, and we are seeing renewed tension around Iran and the Middle East, and this is already affecting markets. Oils and energy prices are rising, and also the government bond yields are also rising. It's all there in the economic calendar, and investors are also becoming cautious. So whenever geopolitics enters the market, you don't get clean trends, and you get volatility and fake moves. So this is very important for traders, pro traders, intermediate, and also new traders. It's also important for even aspiring traders to also know that, and which means overall we have to be cautious. Now from the economic news also, there's Eurozone confusion. There's confusion zone. Here what I understand about this is that the contradiction here, economy is slowing. That is around the euro, economy is slowing. Normally it's bearish, then inflation pressure still exists and can make it bullish or can be bullish. Okay, and also bond yields are rising. So, and this is also slightly bullish. So what do we get? We get mixed signals here. So that's why the euro is not collapsing. All right, and also that is why it is also not strong. Now this is what we call a range driven market environment. All right, a range driven market environment. All right, so let's quickly look at another one. Asia and global reserves. This is seriously a quiet one in signal, and if you look at it, something many traders ignore: foreign reserves. For now, based on what the market intelligence has provided this morning, China reserves dropped sharply. China reserves dropped sharply. Taiwan reserves dropped. Some countries are seeing declines. You see, Asia, quite warning signal, right? So what does this mean? If it suggests that currencies pressure capital movement, possible hidden areas in the system. But interestingly, Singapore reserves increased, and also that tells us something important, that money is not disappearing. All right, yeah, money is not disappearing, and it is relocating. Okay, You know the ones that have declined, you know the one that has not declined. All right, so it's not that money is actually disappearing. Money is what? Moving, shifting from one economy to another. I tell you another one. You see, it's much very detailed, right? Now, the risk around crypto, okay, or sorry, risk assets, I'm going to focus on Ethereum here. Now, I'm going to connect it to Ethereum, like I said, crypto in general, but Ethereum to focus is on Ethereum. And you will notice that something strange, you can see something strange in your data. Ethereum tagged across many economic releases. Yeah, deeply. That is, what I am able to see from the market intelligence, breaking news section. Ethereum is tagged across so many, so many. Why? This tells us that crypto is becoming more sensitive to macro data, and also it tells us as traders that it's no longer moving independently. It's tagged. But here is the key: if global growth slows, then risk of pressure, okay, not risk on, risk of, if global growth slows, that's a risk of pressure. If you don't understand what risk on and risk off means, then you get to understand what this part means. So you see, there's a lot everybody still needs to learn about financial trading. All right, and another key is that if liquidity increases, the crypto, which means crypto can still rise. So now we'll be looking at increase in liquidity, that crypto also maybe one can also boost the others. Then while a lot of cryptocurrency, just see a lot of cryptocurrency, that is if, and it's actually a key. So crypto right now is in we can say in a reaction phase. It's not in a clear trend phase. So whichever way it's actually going to react, we don't know yet. All right, quickly look at another section for commodities, because those are all the information that I have from the market intelligence this morning. Commodities is quietly building strength silently. All right, and talk about aluminium, which is near 4-year high. We'll talk about iron ore, which is also rising. We'll talk about gold ticking higher, XAU. All right, and gold, US dollar. And this is not random. This usually means that inflation pressure is still present. Inflation pressure is still present, and also that investors are hedging risk. All right, now especially on gold, rising gold plus weak dollar, you should know that this is uncertainty in the system. So people are actually hedging. Okay, inflation is actually the pressure on inflation is still very much present, and investors are doing what? Let me hedge, I don't want to lose. Let me hedge. And that is why you're seeing the world at large having many of those I don't want to call it issue. Okay, yeah, why the world is reacting, the world is actually reacting economically. All right, so US dollar is quietly positioning. Okay, that's another one. The US dollar is quietly positioning. Okay, and if you look at it, you would notice that dollar is not aggressively strong, but it is also not weak. But from yesterday's video that I made, it was weak. Weaker than many currencies, but there was no much move as in against those currency, those assets against the US dollar, except what is actually just happening right this morning. Okay, with GBP USD, with Euro USD, with AUD USD, with NZD USD. All right, I know if you flip it the other way around, USD card also will be selling, the US dollar CHF also will be selling. Okay, now it does not mean that the dollar is weak, and it does not mean that it is not aggressively strong. Okay, but however, in risk off situation, like I said, understand risk on, risk off, USD tends to gain with all of these things that is happening, and in uncertainty, US dollar becomes a safe haven. So right now the dollar is waiting for direction. One little direction, you will see the US dollar pick up its strength, and you gather every momentum it will gather and shoot towards a positive direction for itself. Now, another thing I also want us to quickly look at is what is the big money doing? What are the big money spenders doing in the financial industry? Okay, now I'm going to simplify this thing based on the information we have from the market intelligence. Is that the big money is not chasing hype. All of these big monies, spenders and all of that, they are not chasing hype, they are not over trading, they are not forcing direction. Instead, what they are actually doing, if you listen to Bloomberg, if you listen on Reuters, if you watch listen to, watch so many of those financial videos, even CNBC, you will understand that they are not even forcing direction, they are not over trading, they are not chasing hype. All right, what they are just doing is they are watching global slowdown, they are watching geopolitical triggers, all right, and also they are watching liquidity movement. And most importantly, what they are doing is they are waiting to hear confirmation they're waiting for confirmation before they can commit heavily. Yeah, do your research, you will see I have already done something on my own here with market intelligence, so I get all of this information not firsthand, but yes, on a real real time for me. Not actually real time, real time. Okay, I get it firsthand. All right, so I can use it to analyze the market and also use it for my trading benefit. Okay, all right, so that is that about that. So finally, in general, what does everything now means that I've talked about? I've spent 18 minutes. The market is not clean trend. The market is not fully risk off. The market is not fully risk on. The market is just what? Transitional. Okay, so don't listen to all the noise on Twitter, on X. Don't listen to all the noise on Telegram mentors and all of that. Okay, be careful, just be watchful, take a little trade, get out, take a little trade, do your analysis, take a little trade, get out of the market. Don't go and see, because you never can tell, because what the market or what any financial asset might do now, especially the US dollar. Okay, so I will just end this by just saying that trade with confirmation. Don't trade with assumption. Oh, I think it will go up. I've seen a lot of that's why they say 90-something% of traders fail. And you need to reduce over trading, and you also need to focus on key levels, not emotions. Emotions will not make you money. Okay, and especially volatility spikes. Okay, those should be your approach. Trade with confirmation, reduce over trading, focus on key levels, and expect volatility spikes. So these things that I've said this morning is enough to make you become very successful this week, next week. So the simple truth is that these are the things most traders don't want to hear. So this is not the time to gamble. This is not the time this is not the time to also be precise. All right, because in markets like this, the traders who survive are not the smartest. All right, yeah, and they are the most disciplined. It's about being disciplined now. So let me just guide you with this ending, that if you want more structured breakdowns like this, where we don't guess, where we read the market properly, make sure to subscribe, because here at BeaconFX.trade, I am so proud that we don't trade noise, we trade structure. That's why we call it MCF. All right, so, and also visit our website to become part of us, so that you too can also become profitable in everything you do around financial trading. I'll see you in the next one. Thank you. Bye.